Good afternoon, and welcome to the Prince George's Community Federal Credit Union 2018 Lunch and Learn series. Today's presentation is brought to you in partnership with Coffee, a nationwide financial coaching and education center focusing on improving the financial health of individuals. As the premier credit union of Prince George's County, they have joined with Coffee to expand their mission of providing quality financial education to their community and lending insight into credit management, home ownership, and money management. Prince George's Community Federal Credit Union is a full service financial institution serving anyone who lives, works, or worships in Prince George's County, Maryland. They are one of the county's best kept secrets with competitive loan and savings rates as well as discounts to national retailers. They currently serve over 16,000 members in the area and welcome you to come and experience the benefits of membership as well. Later on in the presentation, I will display their contact information and answer any specific questions you may have concerning your financial needs. It's not too late to invite your friends and colleagues to join today's webinar. You should have received an email about 60 minutes ago, and in that email is a link that you can pass along. Please note that today's webinar is live and all phone lines have been muted. If you have questions, please feel free to type it into the question box on the right-hand side of your menu bar. All questions are private and will be addressed at the end of our discussion. We will also be offering a free 60-minute financial coaching session with the completion of 3 webinars. More information will be given at the end of today's presentation. Lastly, a recording of today's session will be available later on today. Details will be sent to your email following the presentation. And with that, I would like to introduce myself. My name is Charmaine Williams, and I will be your presenter today. Now, today's webinar topic is building and repairing your credit. So if you've had credit problems in the past, you probably feel frustrated and worried that your damaged credit history will stay with you forever, or at least a very long time. And yes, it can. That's only if you don't do anything to start taking care of the situation. So you need to deal with the issues. It's a bad idea to bury your head in the sand when it comes to finances and your credit. Now, if you were on the previous webinars, you'll know that we live in a credit-driven society. Credit is used for everything. So if you're not taking care of the situation, yes, it will haunt you forever or for a very long time. Now, these problems will not go away on their own, but with time, effort, and discipline, it can be fixed. So just to recap for those who were on the previous webinars and an intro for those who weren't, your credit report consists of 5 sections: personal information, results and summary section, trade lines or accounts, inquiries, and public records. Now, you're entitled to a free copy of your credit report from one of the 3 or each of the 3 credit reporting bureaus, Equifax, TransUnion, and Experian, for free every 12 months. And you can get a copy of your reports at annualcreditreport.com. Now, your credit score is a 3-digit number that lenders use to assess your risk. And that number changes due to certain factors. And again, those factors depend on you and your behaviors. Now, you will most likely have to pay to obtain your credit score, but a lot of places now offer you at least one from one of the 3 bureaus for free. So check with your financial institution, and if you happen to have any credit cards open, check with them and also see if they offer you one of your free FICO scores. Now, I'm going to discuss what to do to help build or rebuild your credit. Now, there are different types of credit. The 2 main ones that we see on the majority of our credit report are what are known as installment and revolving credit. Now, when it comes to installment credit, those include mortgages, car loans, personal loans, student loans. So any type of financing where you were financed for a set amount, and then you pay that every month until it's paid off. That is what is known as installment credit. Then there's revolving credit, which would be any type of charge card, store credit card, or actual regular credit card. Now again, these you use and pay as long as you have an available credit limit. Now, these are the accounts that you want to verify and make sure that they are reporting accurately. You will also see collection accounts on there as well, and that's if you happen to have an account that was sent to collections. Now, if there was an account sent to collections, know that they were either once an installment or a revolving account. So when you pull your credit report from annualcreditreport.com or directly from the credit bureau, you need to go over it with a fine-tooth comb. Now, please note that it is not unusual to find wrong or outdated accounts and information on your credit report. So, for example, you may find accounts that don't belong to you, which is a red flag that maybe someone has used your information to open an account, so that's identity theft. You may find incorrect balances. So you have a Visa card with a $10,000 limit. You know to yourself you only owe $1,000 because that's all you spent. But when you pull your report, it's reporting that you owe $5,000. That's inaccurate. So that's something that you want to look into. Duplicate accounts. If you were on the previous webinar, I discussed duplicate accounts a bit. This is what happens if your original account was closed and perhaps sold to a collection agency, and then that collection agency sold it to another collection agency. And that same account, which has been bounced to 2 or 3 different people, they're all reporting. Okay, the original ones who sold them are supposed to report that they're closed. All right, so those are things that you want to look for as well. And then old accounts. Maybe you had a negative account and it's past that 7-year mark. Well, why is it still on there? Those are things that you could perhaps get removed. Now, if you find items on your report that are inaccurate or don't belong to you, you're going to want to dispute those items. So again, go over your report with a fine-tooth comb. All 5 sections, your personal information section, the results and summary section, your trade line or accounts section, your inquiry, and your public records. So make sure that the spelling of your name is accurate, your addresses you recognize, your date of birth, your social security number, the employers that they have listed for you are all accurate. If you see things in there that you don't recognize, or if your name's spelled incorrectly, highlight those things. Make a note of them because you're going to want to dispute them. When you get to your accounts or your trade line sections, again, make sure that you recognize the accounts. Look for the balances. If they don't belong to you, highlight it. Mark next to it the reason why you're highlighting it. It doesn't belong to me. The balances are incorrect. This is a duplicate account. Why is it reporting 2 and 3 and 4 times? Maybe the accounts are super old. They've been closed, and why are they still reporting? Especially if they were closed negatively. Those are the ones that you want to get removed if they've passed their 7-year mark. Now, if it was closed positively and it's 7 years, leave it alone. It's not affecting you in a bad way. You also want to look at the inquiries section as well. Do you recognize the inquiries that have been generated? Now remember, 2 types of inquiries, hard and soft. So whenever you give your social security number to someone for any type of information, it's going to generate an inquiry. If you're applying for a loan, car financing, a credit card, a personal loan, a mortgage, etc., that's a hard inquiry. Do you recognize those? Anything soft, you applied for new employment, perhaps new utilities, you pulled it for yourself. Those are soft inquiries. They're going to be on your report, so make sure you recognize all of them. And then lastly, the public records section. If you've never been arrested, well, why is it on there? If you don't have a child, but it shows you OPAC child support, why is it on there? You've never filed for bankruptcy, but the bankruptcy is on there. Why is it on there? Or you had a lien and it was paid, but it's been 7 years from the date that it was paid. Why is it still reporting on there? Those are things that you want to look into. So highlight everything that you don't recognize, that's inaccurate, etc. Make a note of it because we're going to start disputing those items. Now, as I stated, you can and should dispute the items that are not yours or that are inaccurate. You can either write to the credit bureaus directly or you can do your dispute online. Now, if you're going to write to the bureaus, if you're going to send a letter, you need to make sure that you mail them certified return receipt. You also need to keep a copy of the letter that you're sending. And you can find sample dispute letters on ftc.gov. Now, I know we're in the technology age, and doing everything online is easier and more convenient. And each credit bureau has their own website, and on each site, they have the option for you to dispute any items that you do not believe are yours or you believe that are inaccurate. Now, as you can see on the picture, it says get started in 3 easy steps. And I'm pretty sure it is very easy. It walks you through everything. Once you have your report and you have the accounts you want to dispute, the system will walk you through it. Now, you need to be careful because when it comes to disputing online, you always have to read the terms and conditions on the website. And I'm guilty of not reading all of those. Who wants to go through all of that? I just click I agree. And I know most of us do. But you have to be very, very careful because there may or may not be statements in there that cause you to give up some of your rights when it comes to getting items removed. And if you give up some of your rights, you're losing your rights to sue if they don't follow the law. And yes, you can sue the credit bureaus. So in some cases, it may benefit you to do all of your disputes in writing instead of online. And I know this is a lot more work, but in the long run, you will still have all of your rights. So you want your letter to be clear, concise, and to the point. You don't have to tell them your whole life history. Just include your full name, address, date of birth, social security number, and the account or accounts that you want to dispute and the reason why. Ask that they do an investigation to verify the information, and if they can't verify it, then please have it removed. Now, the credit bureaus have 30 days to complete their investigation and verify that the information is indeed accurate, the accounts do indeed belong to you, and they have to provide you with proof of that. If they cannot do that, then they must remove it. Now, again, understand that this is not an overnight process. Yes, you may have to contact them again because if they don't verify that information within that 30-day time frame, they don't care. They're not looking to be like, oh, well, we didn't find out, so I'm just going to remove it. You're going to have to write them again and be like, look, I didn't get verification that said accounts belong to me. You didn't provide me with proof, so you need to please remove it from my credit report. Okay, so you may have to contact them again. Again, you need to keep copies of every letter that you send and also the return receipt because you may have to file a complaint with the FTC or perhaps take them to court. And you want to have all of your documentation in a row so that way the court process is smoother or the complaint process is smoother. You have all your proof, you did everything that you were supposed to do, and they didn't comply. Okay, so make sure that you keep copies of everything and make sure that you mail everything certified return receipt. Yes, it costs a little extra, but you want to be sure that they received it and that someone signed for it. If not, they could always say they never got your letter. Okay, so you want to make sure and back up all of your documentation, have all your ducks in a row, cross all your T's, and dot all your I's. Another way you can work on your credit is sometimes let time heal the wounds. Now, as negative information becomes older, it becomes less important on your credit file. It will still have an impact on your credit worthiness, but that impact becomes less over time. But only if you now pay your other obligations on time. So sometimes if you know it's an old item, it's at coming on to that 7-year mark, you may not want to just, open up a can of worms and start, contacting people, etc. Because remember, it's 7 years from the date of last activity. So if you start complaining about that and they start verifying information and, the creditors and them start contacting you again and they reopen that, that's date of last activity. So that's like you adding another 7 years to your file. So sometimes it's just best to let time heal the wounds. And then after you hit that mark, after you pass your statute of limitations, etc., then you can start writing to the bureaus to have them remove it because it's old and outdated. Okay? But again, you need to pay your current obligations on time and make sure that you're keeping up with your regular bills. Another thing you can do is ask your creditors for help. So sometimes negative information is accurate, but due to unusual circumstances, that's why they're there. So, for example, you may have been in a car accident, God forbid, and unable to work or keep up with large medical bills. Or you may have had a business that failed due to significant change in the marketplace. You may have even lost your job through probably no fault of your own, or maybe fault of your own. okay? And then you couldn't manage to pay your bills. So if you've had a good payment history but fell behind due to extenuating circumstances, and now you're back on your feet and paying your bills on time, again, you may want to ask your creditors to re-age your accounts or essentially delete those previous late payments. Now, they are in no way required to do this, but again, you'll never know if they will if you don't ask. Okay, so it may be worth you asking your lender or your creditor for help. There's no shame in asking. And again, you won't know unless you ask. The next thing that you can do is build positive new credit references. Now, I know a lot of people have gone through issues. Some people have had serious credit problems. You know, you've done dumb stuff when you were young. Nobody taught you any better. You got your first credit card and you went wild, and then you got another credit card and you did the same thing, and your credit history or your credit report isn't the greatest. So you want to start to build positive new credit references, or just build credit references to begin with if you don't have any credit. So the best thing you can do to build or rebuild is to use credit carefully, and again, always pay your bills on time. 35% of what makes up your score is your payment history. Okay, so consumers who are proactive about building or rebuilding their credit after problems have occurred can see significant improvement in as little as a year or two. So here are a few tips. Lenders will want to see at least a couple of recent credit accounts paid on time. If you still have open accounts, use them periodically for things you would buy anyways. So, like I said, stuff that you budget for anyways. And then make sure to pay the bill well before the due date and pay it in full. Carrying a balance and paying interest is not necessary for rebuilding good credit. If you currently don't have any credit cards, it may be a good idea to get one. You want to avoid those guaranteed approval credit cards that cost a couple of $100s in fees. A better bet is a legitimate secured card where you place a security deposit with the lender in exchange for a major credit card with a modest credit limit. Okay. Those guaranteed cards, you need to be careful. They prey on those who have no credit or less than stellar credit. You know, usually your credit limit would be $300 to start, but then they charge you all these fees up front, a processing fee. They make you pay your annual fee up front. They charge you a fee to mail you the card, and by the time you do get the card, you owe like 280, and your limit's only 300. So you're well above your 30% utilization, and you're paying already to try and pay down that card. And if you don't get it down, they're charging you 25, 30% interest on what you already have on there, on that balance. So try and avoid those cards. And then lastly, never pay a bill late. I can't stress enough how important it is to always pay your bills on time. So I was just mentioning credit cards. Again, avoid the guaranteed approvals and opt for a legitimate secured card. Now, if you were to go to a site like myfico.com, you would see that they discuss in detail how secured cards can help you to establish or reestablish good credit. So again, a secured card is a card that has a credit limit secured by a deposit that you make into a special savings account. Your available limit is based on how large of a deposit you make. Some as low as $100, maybe all the way up to $2,000, $3,000, $4,000. Um, you would have to find out from your lender, because if you can afford a higher limit, then I would hope you're paying your other bills as well. You're trying to rebuild your credit. You don't want to go nuts with adding all this money to a secured card. Okay. Now, the money that you deposit into your special savings account for your credit limit is there just in case you happen to default on your payments. Now, remember that you still have to make your monthly payments every month when you use the card. I've had the question before, well, once I spend the $300, am I done with it? No, it's an actual credit card. It's not a prepaid card, so you still have to pay. Now, if you're looking for a secured card, the first place to start would be your credit union or financial institution. Ask if they offer them, and also ask which bureaus they report to, if it's one, two, or all three. You can also check online at sites like creditcards.com or even nerdwallet.com to see who else offers secured cards. But again, always first your financial institution or credit union. That is the best place to start. And then depending on who you get the card with, or your financial institution, once you've been using and paying the card every month like you're supposed to, eventually they will release those funds back to you and make your card unsecured instead of secured. So you'll get your money back. You'll still have your credit limit of whatever it was, and perhaps they may raise it depending on, your behaviors, how you used and utilized the card and how you paid it. Now, please remember that okay, you're getting a secured card. You might do $300. You might do $400. You want to keep your balance low because when the agency, the company, the bank, the credit union, the lender, whomever it may be, sends their reporting to the credit bureaus, you don't want to have a high balance. So, for example, I had someone take my credit course and they got a secured credit card for $300 to help rebuild their credit. But she found that her credit score wasn't increasing. It wasn't going up. And she was asking me why. So I asked a few questions to figure out what was going on. I'm like, well, how much is the limit? She's like, $300. I was like, well, how much do you spend? She's like, because I'm paying it every month in full like I'm supposed to, but my credit score isn't going anywhere. It's actually gone down a bit. I said, well, how much do you spend every month? And she told me $250. Now, general rule of thumb, when you have a credit card, you want to keep your balance well below 30% of your limit. So she really shouldn't be spending more than $30 on her card every month. Now, the thing with that is she spent her $250, but she'll pay it off when the statement comes before the due date, so she won't get charged interest on it. The company she got the card with was most likely sending their reporting into the credit bureaus before her payment hit. So every month she's showing of having a $250 balance. I hope this is making sense. So even if you're going to pay it off in full every month, what you're spending on it, you want to keep it below 30% of your limit. So don't get $1,000 credit card, run $900 on it because you know at the end of the month you're going to have $900 to pay it off. You don't know when the credit company is sending the reports to the bureaus. So if they send it before you make your payment, or if they send it before your payment clears or whatever, it's going to show on your credit report that you have a $900 balance on that $1,000 limit. You've way past your 30% utilization, and that's going to negatively affect your score. So that's paying attention to what you're spending, okay? Paying attention to how much your limit is compared to how much your balance is going to help you build your score. So you want to keep your balances low. If you have to keep a balance on your card, make sure it's well below 30%. When you're spending, again, make sure it's well below 30%, okay? And that would help you build your score. So I hope this is making sense. We'll have question and answers toward the end, but I hope that this is making sense to you. Another thing that you can do to help build your score is what is known as a credit builder loan. Okay, now I've mainly seen these at credit unions. Some large banks may offer them, but mostly I've seen them at credit unions. Check your local credit union to find out if they offer these services for you. Um, in most cases, you will need to have an account with them for a certain amount of time with no overdrafts, etc. This is a small loan that's made to you, and then you pay it off over a course of 12 months. Now, not all credit builder loans are the same. In some cases, you do not actually get the money up front. It may be an account through your credit union where you make monthly payments towards it, and then at the end of your term, they'll either A, issue you a credit card for the amount, or then surrender the funds to you. But you'll be paying every month to help build your credit. Some credit unions do give you the money up front. It could be anywhere from 300 up to 2,000 I've seen as the highest, depending on the institution. Now you pay your monthly payments until it gets paid off. Now my little tip suggestion is that if it is a credit union that does hand you the funds, they deposit the funds into your account that you can use at your leisure, and you are trying to build or rebuild your credit, don't take the money out, don't spend it. Get the credit builder loan to help you. They're going to deposit the money into your account and then set up automatic payments for said loan. And then just let them take the money back. Okay, this way you don't have to worry about where you're going to get it from. You don't have to worry about, oh, well, how am I going to make my payment this month because it's already in the bank. Okay, so if it is a credit union that does issue you the money without doing that special account and then gives it to you after, if they issue you the money up front, just let it sit there and pay it off. The reason you're doing this is to build credit, not to get money to spend to go shopping or do something else. The reason you would take out this loan is to help you build credit. Okay, so find out from your financial institution what their terms are, how they work it, you know, that way you can understand and then figure out if it's good for you to do. The next thing I want to talk about is alternative credit scoring. I'm not sure if you've heard about alternative credit or what they like to call non-traditional credit. Now, an alternative credit report has nothing to do with traditional credit, so Equifax, TransUnion, or Experian. Okay, this is a report where you would report things that don't usually get reported to those three credit bureaus. Okay, so alternative credit scoring is a great option for those with limited or no credit or bad credit. This is a way to help build non traditional credit. Now, again, it's not associated with the three credit bureaus, but it is being used more widely now for things that your traditional credit is pulled for. Many lenders are using it for deciding factors before issuing credit. And what can be added to your non traditional or your alternative credit report are things like your rent, utilities, your car insurance, cell phone, gym memberships, any monthly subscriptions you may have like Netflix, Hulu, Amazon Prime, things that you pay but you don't traditionally get credit for. So cell phones don't usually report unless you owe them money and they have to cut you off and they put you in collections. That's when they'll start reporting. But you pay your cell phone bill every month because if not, how would you communicate? How would you get through for things? A lot of people don't have house phones anymore. They're pretty much turning into dinosaurs. So your cell phone bill you pay. You pay your electric bill every month. If not, you wouldn't have electricity in your house. So these are things that you would want to add to your alternative or your non-traditional credit report. Now, PRBC is a great site. If you were to Google alternative credit or non-traditional credit, you'll get a list of sites that pop up. PRBC.com, like I said, is a great one. It's free, and they give you a credit score, non-traditional credit score, of 300 to 850, just like a regular score, and they also give you a report. Okay, so those are some things that you may want to look into. And again, a lot of lenders are using this to help make their credit decisions. Um, I work with a lot of lenders who use non-traditional credit or alternative credit reporting uh, when they have a client coming in to apply for a loan for a mortgage. Okay, so it's something that you could look into. You do want to get that type of credit for things that you don't usually get. You pay your bills on time, you pay these other monthly bills every month on time. You should get some type of credit for it. Now, the thing with alternative credit scoring and reporting is that your lender usually isn't going to pull it for you. So if you know you're going to try and buy a new car or apply for a loan for a mortgage, you would need to pull your report yourself, print it, and take it with you to show on time steady payment history for the last 12 or 24 months. Okay, so it's something to look into. You can Google it, and a whole bunch of different sites come up. Again, you look for the one that will work best for you and one that you trust and you'll be able to figure out on your own. Okay, so that's something to look into to help with your credit. That's also something good for teenagers, etc., who don't have a lot of credit history, but maybe they do have a cell phone you want to put it in that they pay for. Maybe they do go to the gym and they have a membership. Even if it's under your name and you're paying it, if it's linked to their alternative credit reporting system, then once you pay it every month, it'll show and it'll help them start that way, and then they could build in other ways as well. Okay, it's always something good to have. So next I'm going to discuss what your credit responsibilities are. And if you manage these properly, it will help increase your score and better your credit report. Okay, so the first one is obviously borrow only what you can repay. Do not overextend yourself. Remember, you're borrowing this money and you have to pay it back. It's not yours. When it comes to credit cards and store cards, remember it's an expensive short-term loan, especially if you don't pay it off in full by the due date and they start to charge you interest. So you want to make sure that you borrow only what you can repay, what you're comfortable paying. All right? Always read and understand your credit card contracts. Well, again, always read and understand every contract, especially when you're starting to dispute. Remember, if you're doing it online, read those terms and conditions all the way through. You don't want to agree to anything that you're not sure about. And the same thing goes with your credit card contracts. Again, they may offer you 0% APR for the first 6, 9, or 12 months. But then what is it after that introductory period? I've said it before and I'll say it again. I've seen credit cards with interest rates as high as 35%. You don't want to pay any interest for the first 12 months and then they start charging you 35% on your purchases after that 12 months. Okay? Or, you don't have to pay an annual fee for the first 12 months, but then your annual fee on your lower limit credit card because your credit's not where it's supposed to be is your annual fee is $150 and your credit limit's only 300. Okay, so those are the things that you want to look into. Always make sure to read and understand it. If you don't understand it, ask questions. If you feel it's predatory and you don't want to sign up for it, you don't have to, okay? Because remember, all these applications that you put in affect your score as well. So if you're trying to rebuild or build, don't just run around applying for everything that you're offered. Do the research, do your homework, and then apply for it. A lot of websites, a lot of credit card issuers nowadays have that soft pull of your credit with the last 4 digits of your social security number. And when they soft pull you, they'll give you an idea of what you may qualify for. Do the terms and conditions work well for you? Is it a convenient card? Are there rewards on it? Is it something that you would like to use and you know would benefit you in the long run? Then you can put through the actual application and hope that you get approved. So don't go nuts with just applying for stuff just because you're trying to build or rebuild. Okay? Make sure and use credit responsibly. The next is to pay your debts promptly. Again, I can't stress it enough. I've probably repeated it 10 times in this webinar and another 20 to 50 times in the other two. Always pay your bills on time. 35% of what makes up your score is your payment history. And that's what lenders, finance companies, and businesses want to see when they pull your credit. Do you pay your bills on time? So always pay them on time. That helps increase your score. Okay? If you cannot make a payment, call them, call your creditor, let them know in advance, hey, something's going on. I won't be able to make my payment on the 15th when it's due, but I could make the payment on the 30th, or I could double up on my payment of the 15th of next month because you don't want that 30 days past due reported on your credit report. So call them, work out arrangements, let them know what's happening, and they're more willing, like I said, to work with you when you contact them before they have to start calling you. Okay? Avoid buying on impulse. Put your cards away. Bury them in the backyard, freeze them in the freezer, cut them in half if you have to, if you know you don't have the willpower not to spend on them. All right? If you're trying to get out of debt, you're trying to pay them off, you want to get your credit back right, you're trying to use it responsibly, you can't just be out there impulse buying. Okay? Report lost or stolen credit cards immediately. You don't want to be held liable for the charges that are made on them. I'm a bit paranoid. I have lack of trust for a lot of people because it's happened to me before. So now I check my credit card statements. I go online to the apps that I have on my phone. Even though I know I'm not using them, I look to make sure that nobody else is using them either. Okay, I'm only supposed to see certain charges on each one because I know what's automatic on each one. I go in and I look. I do the same thing with my bank statements. I go in and I look. I check my accounts every day on my phone because people have used my information before. People have used my debit card information and they've gone shopping and tried to pay their bills, etc. So I check every day. If you have to check every day, check. You don't want to be held liable for the charges that are made on your accounts if you don't report it right away. And then lastly, never give your card number over the phone unless you initiate the call or are certain of the identity of the caller. And that's a big thing. Identity theft is a big thing. Okay, I know they made that movie and it was really funny, but it happens. People get phone calls, "Oh, you've got this," or "Oh, hey, I'm calling from your Discover card, and can you please verify your card number and the last three digits on the back of it?" No, why are you calling me? You have my information. What exactly do you need from me? So don't give anybody your card information. Shred your statements when you're done with them if you still get paper statements. Don't just throw them away. Keep all of that stuff shredded or scan it and save it to your computer and then shred it if you know you're going to need it later on in life. But be very careful with your information because one of the other reasons that people's credit is messed up is because someone has stolen their information. Someone used your social security number to open accounts, used up said accounts, and then never paid them. And if you're not checking your credit report annually like you're supposed to, you're not going to know that it's on there. I've known people who haven't checked their report in 3, 4, 5 years, and then when they finally do check it, they're surprised at what's going on. Okay, so if you know to yourself, hey, I've been doing well, I have decent credit, or I have no established credit, I'm starting to build, and then all of a sudden you apply for something or you go to do something and you're denied, make sure you look at that letter that they send you. Make sure you ask them why. Figure it out. Check your report. You're entitled to your report for free every 12 months. And if you feel you've been the victim of identity theft, you're entitled to it more than once for free for the year. Okay? So look into it, pull it. These are your responsibilities. You're on the path to building or rebuilding your credit. Everything in writing. Make sure you keep copies of everything and be responsible. And always remember that it's not an overnight process. I don't care what anybody tells you. Rebuilding your credit takes time and also changing your behavior as well. Okay, so no matter what the so called credit repairs companies say, it's not an overnight process. Yes, some may see results faster than others, but that's because everybody's situation is different. And then also be very, very careful about these little by the side of the road credit repair companies that say, hey, we can get all negative items removed, whether they're yours or not. They want their money up front, okay? And like I said, the credit bureaus have 30 days to do that investigation. And usually within that 30-day time frame, those things fall off your report because they're investigating them. They're trying to verify the information. So they're not going to report it while they're doing their investigation. You paid some strange person by the side of the road $300 to do that. They're sending out a bunch of letters in your name, okay? Disputing all these items. You think, hey, great, you pull your report. They're like, look, everything's gone. But then once they start to verify this information, guess what? All of those items start to come back on and they start to report them again. You lost out $300 and you don't know what happened. And also remember, too, that if you are opting to go the credit repair agency way as well, if you want to go down that path, they are not allowed to charge you upfront for their services. So if anybody says you need to pay this amount full upfront, no. Maybe a deposit, yes, but they can't charge you in full for their services upfront before they actually perform their services. Okay? So those are the things that I want you to remember, and I'm hoping that you're taking away a lot of good information from this webinar. Again, in the notes, it's going to have all the laws and the acts that protect you and all of the information that I discussed. So I'm going to open it up for questions and answers now. Again, if you can please raise your hand if you want to type a question, and I could hold off a bit and wait for you because I know not everybody types 5 million words a minute. So I want to be sure that I'm waiting for you. Okay, so we have our first question. What if a company has gone out of business and you can't find proof that they were paid and it was years ago? Okay, so if a company has gone out of business and you can't find proof that you paid them, which I'm sad to say is unfortunate. um, Depending on how long it's been, how long it's reporting on your credit report, you can either A, just dispute it, especially if it's at that 7 year mark that, it's old, it should fall off, get rid of it. If not, you're going to have to wait until it hits that 7 year um, mark, because if you can't find proof, if you haven't kept it to find proof that they were paid, I'm not exactly sure what else you can do, but wait until it hits that 7 years and have them remove it because it's an old, outdated account. Um, Foreclosures usually stay on your report for said 7 year time frame. Sometimes more, it could be up to 10 years. Someone asked how long does a foreclosure stay on your credit report? Like I said, most negative items stay on there for up to 7 years, sometimes longer. So if it hits that 7 year mark, it should fall off. If not, it's probably still going to be on there. But like I said, most are 7 years. You're very welcome. Are there any other questions? If you can raise your hand and let me know that you're typing a question, and I'll wait for a bit until you type it, and then I'll answer you. I'm not seeing any raised hands. Oh, another raised hand. Another question? All right, just to confirm, you have to make changes with each of the three. Yes. Thank you for that question. That's great. Uh, each credit reporting agency, Experian, Equifax, and TransUnion, are all separate for-profit entities. Okay, so if you are disputing an item that is on your Experian credit report, but it's also showing up on your Equifax credit report, you need to dispute said item with each bureau separately. The only time the bureaus communicate with one another is if you happen to be putting a fraud alert or a credit freeze on your credit bureau. If you do a credit freeze or a fraud alert with TransUnion, they should make sure to ask them, because again, they're not entitled to, but they should communicate to the other two bureaus that you're doing that. When it comes to disputes, you have to dispute with each one. That's the reason why you're pulling all three. They're not going to contact one another in regards to a dispute, because basically they're getting paid to report this information on you. Okay, so they're not going to be like, oh, hey, guess what, TransUnion? Charmaine's disputing an item over here with me, Experian, so we want you to remove that as well. That's not how it works. You need to dispute with each one individually. Okay, so I hope that answers that question. Are there any other questions? I don't see anybody else's hand raised. Oh, one more. Okay, so how can we go back to retrieve? Ooh, that webinar has been closed out. I will make a note that you need it. You didn't get to click it because I remember you said you couldn't find it. How to retrieve the PDF from the 11 a.m. webinar. I will have to send that to you um, individually, because if you missed clicking on it at that point in time, since that webinar has been closed, there's no longer access to it. You'll have access to the video, but you won't have access to the notes. So I'll get that out to you this afternoon. Are there any other questions? How do you remove liens once you pay them off? Okay, so once you paid off some type of lien, again, liens can stay on your report for up to 7 years from the date that they were paid. But once you have proof and that receipt that you paid it off, again, you can send that information with a copy of it to said credit bureaus that are reporting it um, on your report that it was paid and you'd like to have it removed. Okay, uh, that's one way, well, the only way actually that you can do it. If you don't want to wait the 7 years, you can send proof of payment and receipt that it was paid and have them do it that way. All right. Um, so we're going to go ahead and wrap up um, our webinar for today. Again, I hope you found it to be very informative. So thank you again for attending today's educational webinar. So to learn more about Prince George's Community Federal Credit Union or to speak with a member service representative, please visit princegeorgescfcu.org or call 800-952-7428 or the number that's on your screen. To schedule your free 60-minute financial coaching session, please call Coffee at 866-459-5165. And also, if you enjoyed today's webinar, please be sure to visit princegeorgescfcu.org/lunch and learn to check out a list of topics for the year. That's the end of today's three-part session. Thank you again and have a great day.